Earnings season nearly over, so what will drive the markets and the economy now? We ask Brian Brenberg, chair of the program in business and finance at the King's College in Manhattan, and John Manley, chief equity strategist at Wells Fargo. Good to see both of you, gentlemen. Good morning. Welcome back, Brian. Haven't seen you in a while.
Good to be here.
John, let me begin with you. What is going to be the catalyst for the market going forward as earnings season winds down? I do point out we get TJX companies, Home Depot, Coach. They are reporting today, but we heard from a lot of the big names already.
Well, you know, I think there may be a bit of a lull. I think we're waiting for new earnings to come out. We're waiting for guidance from corporations. We're waiting for signs the economy is recovering. Consumers are doing better. We may be seeing signs the emerging markets are doing better. We'll get a lot of different little things, but not quite the impact you get with individual earnings.
Brian, you know, investors are buying every dip that we get, and these dips are proving very temporary. Where does the market go from here?
Well, I think investors are going to be paying a lot of attention to policy again when we get into September. Remember now, we're talking about crunch time for tax reform. We're talking about debt ceiling. So earnings finishing up, investors are going to start to look at those policy measures, and they're really going to say, look, are we going to get the things that we've been expecting all year? And if we don't, I think you're going to start to see that move markets a bit.
John, do you think investors are really paying attention to Washington, or have they kind of just glossed over it and are focusing on the fundamentals of the market?
Expect the worst. You'll never be disappointed. I think that's what's happening. I think they expect very little from Washington. That's exactly what they're getting. James Madison designed it that way. We have a very inefficient government. That's how the Constitution was constructed.
So does that suggest that should we get tax reform, should we have consensus right away on raising the debt ceiling, Brian, that this stock market, which stalled around 22,000 yesterday, by the way, you saw the Dow go above and below 22K 246 times. Would that give investors the push that they need to go to, let's say, 23,000?
I think it'll give investors a push because, look, they've been waiting and waiting to see if any of the president's priorities get through. If you get something done on tax reform or even just tax cuts, I think investors will look at that as a win, and you'll see that move markets north. Look, they like the earnings. They like what's going on in the global economy. There's a lot of wind at their sails. A policy win here would only help that.
All right, we get retail sales today, John. What are you expecting there? Is the consumer stronger?
I think the consumer is stronger. I mean, I don't know if it shows up in individual sales. Obviously, they're subject to variation. But I think consumers are feeling better. It's been 9 years since the disaster. I think people are forgetting. They're remembering they have money in their pocket. Their houses are worth more. That should account for something, I think, going forward.
Yeah, it's kind of depressing in a way where we're forgetting that we have money in our pocket. Yet at the same time, Brian, credit card debt, $1 trillion. This is a big deal.
Yeah, I mean, there's some of these looming issues, but I do think that the primary issue still is, can we get wages up? Will we see inflation tick up? Those are really the measures that give us a picture of how strong the economy is. Those are going to be big issues, by the way, as the Fed thinks about a rate increase in December. So I think those are really the big issues on the table right now. The credit card, the housing debt, they're looming, but we have more significant things when it comes to consumers' pocketbooks.
But speaking of the Fed, John, where is the inflation? We are failing to see it. So does that basically mean no more Federal Reserve interest rate hikes this year? We do get the minutes from their last meeting on Wednesday.
I think the Fed is, I won't say they're on hold, but I think they're being very, very cautious. The Fed is trying very hard not to get ahead of themselves in dealing with inflation, which so far has been a chimera. It just hasn't been apparent.
Hence, we get this float higher, Brian, you know, investors just buying into stocks, buying any pullback they get, putting money back to work in the strongest performing sectors this year, technology, healthcare, banks, you name it. Yet volume, Brian, has been pretty soft. What does that tell you? Is there conviction here?
Well, I think it tells me that investors are still concerned about bigger picture issues, like what's going to happen with economic policy. How strong is the economy really? I think if we start to see some stronger measures, particularly with inflation at the end of the year, that can prompt the Fed to move rates up, that will be significant. We haven't seen that this summer. That's the big question going into the fall.
All right, John, I'm going to let you finish this up here. Do you think the rally we saw, the modest rally we saw on Friday, the big rally we saw yesterday, and futures being higher today, is that because tension between the Donald Trump administration, between the U.S. and North Korea, has eased? Is that the reason? I
think there's a little bit. Yeah, that may be something in the short term, but there are good things happening. Earnings are going up. The Fed is not tightening. And I think valuations are high, but they're at the low end of high. So I think it's okay.
John, Brian, thank you so much.
Thank you. You bet.